Welcome to this Killick Explains video. This time I want to take on the results of another poll that I conducted relatively recently about the global economy and global stock markets to make the point that stock markets can constantly surprise investors. So when you're looking ahead and trying to think about what might happen next, the reason it's so difficult is you've got to not only predict what will come through in terms of economic data, but you've also got to predict what it'll do to markets. And a classic example of this was the pandemic of 2020-21, which we're just coming out of the end of as I make this video, where at the beginning, in the spring of 2020, we saw markets plunge as news of the pandemic spreading emerged, only to then see them recover quickly and go on in 2020 to post overall returns of 11 or 12%, depending on which market you were following. So there's a good example of where even if an investor had been able to predict the pandemic before it happened, pretty unlikely, could they have also predicted the direction that the stock market would take subsequently? I suspect not. Now, the poll question I asked was based around that. I asked for expectations of what will happen across 2021, so another crystal ball exercise in terms of the global economy and global developed stock markets. Are we likely to see in America, for example, the economy grow and the stock market rise or fall? Or are we likely to see the economy contract, but will the stock market rise or fall? And the answer is all four are possible. So let's take a look at the possible answers here. Now, the top answer, let's start with that one, was people that responded to the poll expect the economy to grow and stock markets to rise. That was around 42% of the people who replied, and there were a good number of respondents. So logically you might think, well, that makes sense. Surely the stock market and the economy always travel in a similar direction. But the answer is they often don't. Why not? Well, before I answer that, let's take a look at the next most popular answer, which was people who thought the global economy would grow, but that stock markets would fall over 2021. There's nothing wrong with having that view. That was 29.6%, around 30% of respondents. And that's because stock markets look ahead, whereas economic data tends to be in the moment or to date, if you like. There are economic forecasts, but they're as unreliable often as stock market forecasts. So someone thinking, well, the global economy could carry on growing, but stock markets may fall. What are they thinking? They're probably thinking that the stimulus measures, for example, Americans receiving money direct into their bank accounts from the government, would help to prop up the economy, but actually looking ahead, stock markets may see trouble in the form of looming inflation, in the form of the roaring period post-pandemic coming to an end, in terms of central banks having to rein back some of their largesse, tax rises, and so on. So the fact that stock markets look ahead could lead someone to conclude that actually the outlook for the stock market is not as bright as perhaps it is in the short term for the global economy. Now then, there were people, around 20%, who decided that what they expect to see is the global economy contract in the short term, but stock markets to rise or carry on rising, and that's perfectly possible. The gloom and doomsters who thought actually once things like furlough are withdrawn, once tax rises start to take effect, once supply chain issues bring in a bit of inflation, for example, once all that takes effect, we could see economic activity actually contract, consumers tighten their belts, businesses not invest, but at the same time see stock markets looking ahead to brighter times and actually rising through the year, looking ahead, looking beyond the pandemic to what lies beyond it. So there you've got people legitimately saying the economy can contract while stock markets rise, because short-term economic gloom coming through in the data, contractions in GDP and so on, could potentially be the opposite when it comes to people taking a view, discounting earnings in the stock market. And then finally, you've got a group of people, the pessimists if you like, who thought, well, actually the global economy will contract and stock markets will fall too. Possible, nothing's impossible. That was just under 9% of the people who responded. And that would be people thinking, well, as and when economies contract, surely they drag stock markets with them. And the answer is, over the long term, they potentially do. But in the short term, if I can leave you with this thought, the stock market and the economy are a bit like a dog walker and a dog crossing a park. The dog, the stock market, will take a path that goes like this, weaving around trees, across bushes, scampering here and there, sometimes returning to the walker, sometimes not. But the dog will eventually arrive at the same gate on the other side of the park as its owner. Meanwhile, its owner will probably take a much more straight line route through the park. The two will end up at the gate. The dog doesn't want to get left in the park after all, but the paths they take will be very different. And that's one way to see the stock market and the economy. Yes, very long term, there has to be some degree of correlation between the two, but over short and even medium term time horizons, not necessarily. And that's the difficulty with predictions and why investors should avoid them as far as possible. To go back to what I said at the beginning of this video, it's all very well, even if you can predict what the economy is going to do next, which is pretty difficult, can you also predict how the stock market will react? To find out more about what's a pretty big topic, do try my video library, killick.com/learn, and you might want to go to the Investing Principles tab, for example. And if you'd like to know more about equity investing in general, then I have a guide, How to Invest in Equities, and that's available if you email me, editor@killick.com.